Don Peebles, jump in here, because Stephanie just said this is seeing increases for all of the things that we need: food, energy, and shelter. What are you seeing in terms of real estate with regard to inflation, Don?
By the way, I agree with Stephanie, by the way, that we have significant inflation, and the Fed policies of raising interest rates into it is going to create significant problems. It reminds me of when I first started in the real estate business in the late 1970s. I started in 1979. Inflation was about 12%. Interest rates were climbing so rapidly, and they weren't able to control inflation with interest rates. And we had interesting similarities to what's happening today in terms of oil and fuel prices. Different reasons for them, but oil and fuel prices were they increased significantly. And remember the gas lines. I think what's happening here in the real estate side is that we're seeing in the moderate levels and the upscale housing prices of $1 million to $3 to $4 million, where most of those buyers are using mortgages. You're seeing a decline, a pretty consistent decline across the board in terms of demand. However, cash buyers are continuing to buy, and they're getting a little bit of relief on pricing right now. So I think that you're going to see a slowdown in some of the major markets, but I think South Florida, for example, will continue to be stronger because people will continue to flee for quality of life and tax policies and business-friendly environments from the Northeast, especially, say, New York City, unfortunately. I think that interest rates are going to keep coming, by the way, and if they do, they're going to have a chilling effect on the real estate industry, and that's, of course, one of the biggest drivers of what people need is shelter.
Well, that's right. And we've been watching some of the indicators in housing, Don, roll over. And that's caused me to say, well, we must be seeing a sharp slowdown if probably the most important or biggest piece of it is showing such weakness. Look, I've got to get your take on where this is going later on in the year. I know you have development in South Florida. You're seeing the demand there. But what about the rest of the country? If you're in the market for a home, if you or are a renter, what kind of inflation are you seeing?
Well, I think you're seeing in some markets, by the way, say, for example, in South Florida, in Texas, say Dallas, Fort Worth, and markets, that are having significant growth. We've seen prices increase 20 to 30% in terms of real pricing in about 18 months. Those are phenomenal increases in pricing. And what's happened is there's been a significant reduction in inventory. And so part of the reason we're seeing a slower volume in places like, say, Los Angeles, for example, or Miami, you're going to see some volume slow down, is there's just not enough inventory to go around now. Texas, same thing. Even secondary markets or tertiary markets like, say, a Santa Fe, for example, where they were a very strong and active market with massive appreciation, they're slowing down because there's no inventory. So the supply chain disruption and the lack of sellers is going to, fuel a further slowdown along with these climbing interest rates.
Wow. So you're saying single-family homes up 20% in places like Los Angeles, Don?
Yes. In fact, Los Angeles, I think, was contrary to, say, a Florida, because there you've got a high tax policy, you've got a declining quality of life, and yet prices continue to increase. But a big part of it is people see it as free money. There was free money available. When you could borrow at 2 and 3%, people considered that free.